Hello, so silver is currently moving in its consolidation phase and I am tracking a few different scenarios. So the first bullish scenarios is that we are counting this as an ABC, a finished zigzag. After that we have 1, 2, 1, 2 of a lower degree, 3, 4, 3, 4 and so on, looking for higher prices and continuing the trend. The other possibility is counting this the same ABC, but this time we are connecting this A with A, B, C, W, X, Y into a wave B, and then wave C, and afterwards taking out this high, creating a flat. The other possibility is counting this the same, ABC in a W this time, afterwards ABC for a wave X, and then we have ABC creating a double zigzag like that. After that, we are moving up, taking out this high and continuing the trend. The last bullish scenario is this. So 1, 2, 3, 4, 5, impulse wave A, B, C, D, E in a wave B, and then wave C moving down, creating an ABC zigzag like that. And afterwards, we are taking out this high, continuing the trend. The only bearish scenarios are these two. So here 1, 2, 1, 2 of a lower degree, and then 3, 4, 3, 4, 4, 5, and so on, looking for way lower prices. And the last scenario, the bearish scenario, is this 1, 2, 3, 4, 5 in a wave 1, ABC in a wave 2, 3, 4, 5, and so on, looking for way lower prices. So if we start with the bearish scenarios, the probabilities here. So here you can see the proportions are very important in Elliott waves. So here wave 1 and 2, even you compare that with wave 3 and 4, and you can see in time wave 4 is so much bigger than wave 2. And if we check it, you can see that it's over 6 fib time, which is very uncommon for a wave 4. It's never an invalidation. Time is never an invalidation. It's just a guideline. It is very uncommon for a wave 4 to be that long. So therefore, this has a very low probability just because of that wave 4. And if we take a look then at the other bearish scenario, counted this as a wave 1, 2, 1, 2, which fits better going down here, but then this lower degree wave 1, 2 has the same issue, but this is even longer. So here you can see that wave 2 compared to this wave 1 is stretching way beyond. I have to move it here to the left to even see the 6 fib time. But here you can see that we are way above 6 fib time, which is lowering the probabilities of this scenario way down. So, and also we hit this, the low probability wave 2 target, which is even furthering lowering this probabilities for this scenario. So if we are bearish, then this scenario is the one we are looking at. But as I mentioned, this has a very low probability of being a wave 4, and thus this has also a very low probability. So that was the only bearish scenarios that we are looking at. So then it's basically a win for the bulls at the moment. So here the ABC with a triangle. Here we are basically creating like a barrier triangle, and that is quite uncommon. And also it is uncommon to break out this line in a barrier triangle because if we have a barrier triangle like this, you want to break out this way, and in that horizontal line, basically you want to break that. You don't want to break down here in a barrier triangle, but that is exactly what we are looking at here for a zigzag. So this it's not the highest probability of being a triangle. And also you can see the proportions here of wave C. It's very long indeed. So it's not invalidated, but it has a very low probability. Then the double zigzag, ABC, W, ABC, X. As long as we keep below this yellow line, this has a higher probability. And we hit the minimum target as well for a wave X, which is fine. And after this, we are looking for an ABC like that, taking out this low, because it's very uncommon for a double zigzag to not take out the origin of the first zigzag. Afterwards, we are looking to continue the trend. But yeah, it's mainly between this, a double zigzag, or a finished zigzag. But this has a very high probability as well. And also it's very important to use a channel here, because in a double zigzag like this, you basically don't want to break this line, because if you do, then you are above this yellow line, and as well this is more a telltale of a impulse like a wave 3. So keep within this channel and don't take out this yellow line, and then it's a go for this scenario. So we could be looking for more downside before we have more upside and continuing the trend. And this, so the option for this, if we are breaking this yellow line, is a flat. And that is counting this as an ABC, as I mentioned, and then ABC, W, X, Y into a wave B. And the minimum target here for a flat is here at 114. That is a regular flat, but it's more common for a wave B and to be an expanded flat. And that is then taking out this high and reaching around 123.6, that kind of, but it's a maximum of 161.8. So we could be looking at a ABCWX ABC like that, faking everyone out and then moving down in a wave C, and afterwards we are moving up, continuing the trend, because an expanded flat is a higher probability than a regular flat. But still, this is continuing the trend afterwards. And then the only bullish scenario where we are finished. So ABC in a zigzag, perfectly fine. And here we have 1, 2, and then 1, 2 of a lower degree. This is a perfectly fine and viable count. The only issue, as I mentioned before, is that you want to break out of this base channel. You want to have a clear break here to signal that this is a wave 3, because it is most common for a corrective structure to keep within this channel, and it's more common for an impulse 1, 2, 1, 2, 1, 2, 3 to sooner or later break this channel. So if we break it, we are either looking at a flat, or we are either looking at continuing this trend and this being finished, and then we are looking for way higher prices. So yeah, I'll be updating this as soon as something happens, and I hope you understood what I meant, because it's quite a few different scenarios here. If you found this analysis helpful, feel free to subscribe, and you can also find Elliott Wave resources at mellantrading.com. I'll see you in the next one.